Good day, everyone. Well, as we all know, Janet Yellen remains a dove in terms of interest rate movements. Plus, we have that dot plot, which also made market participants more bullish, which shows that the rate hikes going forward would be slower than expected. So basically, QE is still in force for the prolonged period of time. We've got the Fed basically focusing on the economy, but we can see already that they're going to manipulate not just the data, but their interpretation of the data. Anything basically to maintain their position of keeping rates unusually low for a prolonged period. They're not saying that in the text anymore, but that is their intention until the economy really does show legitimate signs of improvement. And it certainly hasn't as of yet. There are smatterings of these reports here and there that show, well, maybe things are turning the corner, but we're really not seeing any form of true recovery as of yet. And the Fed knows that, and Yellen doesn't want to upset the apple cart and undo basically 6 to 7 years of money printing, that have propelled these markets to new heights. And we're in this very aging bull here that's, again, a manufactured bull market because when you keep printing money, it's got to go somewhere. And, one of the vehicles where money goes is in the stocks. And the U.S. is the tallest standing midget, so the U.S. market tends to, it still is in the lead in terms of performance over the many years. And the corrections are absolutely minimal. I mean, the S&P 500 has yet to correct 10%. I think the last time it did that was back in mid-2012. So what's that? That's about that's almost 3 years.
Yeah, they say 41 months, Dr. K, is what they're saying. That doesn't really count out right.
Wait, no, the S&P hasn't corrected for, let's see.
It's like
10.9% correction in
June of 2012.
June of 2012.
Yeah.
Yeah.
So that's like 34 months or 33 months, right? Am I missing something?
Yeah, it's just about 3 years, almost 3 years.
Yeah, so whoever was saying that, they need to learn how to count months properly. But I read something like 41 months, and I thought, no, that's not right, because I know that the last 10% correction was June of 2012.
Yeah, I mean, maybe if they're taking closing prices or something, but yeah, I mean, you'd have to if they're manipulating it and in that way, then you go all the way back to October 2011, where the market's corrected more than 20%, and but really since then, the markets have really not corrected as they should. So it's pretty much an unprecedented period. That's due to all this money printing manipulation going on. So, what's the Fed's next move? I think they're, as we've said many times, they've painted themselves in a corner. They don't really have moves left. They just got to hope that the economy starts to gain traction at some point, because otherwise, this money printing, I guess, just keeps going on ad nauseum. And this is true around the world because the other central banks are doing the same. These central banks seem to stay lock in step with one another. And the question then will be, what happens next if the economy doesn't really gain the traction that it should? And that's an interesting question that as Greenspan said, we're unprecedented territory, absolutely unprecedented. So what does come next? It's food for thought.
Maybe we just become like Japan, and we just continue to muddle around. And you basically take the same approach that I found to work in this market, which is using early buy points and selling into strong moves to the upside, and then looking to buy again on weakness. That seems to be what really works. So maybe it goes on for a long time, Dr. K.
Yeah, look at Japan since 1990. It's been pretty much they talked about the lost decade in Japan in the year 2000. And now here we are 15 years later, so what is that, the last 2.5 decades due to their effete economic policies that hamstrung businesses.
Yeah.
But at any rate, we've got the old same old with commodities heading lower, oil's hitting new multi-year lows. The demand out of China keeps lessening because China's economy is also in a bit of a spin. Is, I suppose, relative to the rest of the world, it has the highest economic growth rates, but it's also kind of it's an emerging market, so it's going to have higher growth rates, and it also calls into question how accurate those statistics are, because we know that some Chinese companies are pretty faulty in their reporting requirements, and I would imagine that the government in China is no better than, say, the U.S. government in terms of reporting their own statistics and manipulating the data. So all that's to be said that the global economy is in a rut, continues to be in a rut since 2008. So we're 7 years into this money printing mess, and what's to come? It'll be very interesting because we are in uncharted territory.
Yeah, I think it all boils down to just watching stocks and making money where you can, and that's pretty much it. It seems like also, Dr. K, you don't pay attention too much to the indexes. Watch what stocks are doing. So, for example, I notice as we're getting this pullback in the NASDAQ chart here, you can see as we're coming in like this, I've got my eye. I might be short a couple things, maybe more than a couple things, but at the same time, I've got my eye on some of the long situations I like as they pull back, and so my preference is to jump in on weakness and take advantage of that, because a lot of times if a stock is showing strong signals, for example, Grub over here, which had a pocket pivot right here, and it actually acted strongly in here and turned before the market. So it actually turned off the 20-day moving average, exponential moving average, I should point out. I had somebody email me all confused that they were trying to put a 20-day moving average on their charts, but it doesn't match mine. That's because I use an exponential. But the bottom line is you can use anything that's roughly close to that, right? What do you use, Dr. You use like a 19 or a 21 or something?
Yeah, I use the 21.
Yeah, and it's simple, right?
Yeah.
Yeah, simple moving averages for simple minds, as I like to say. I'm a very deep and complex person, so I like to use exponential moving averages. They also sound cooler, but anyways, so you're catching some contrarian strength in here, and it's turning before the market is. Okay, so this gives you an idea that maybe this is tradable on the upside. And I'll trade something like this all the way up. And of course, we broke out to a new high on Monday. Is that right? No, on Tuesday. And then you come in, and you can see that on the weekly chart here that you basically have this big cup. And so it would make sense that you'd run into some overhead here. So I sell into that and then see if it drifts into the 10-day moving average. But I still like this stock. I like this name. I think it's a strong name and one to be in if the market continues to go higher. Another one I've liked, GoGo, the pocket pivot here off of the 10-day moving average. You also notice it's roughly, let's see, if the NASDAQ was turning 1, 2, 3, 4, 5, 6, let's say 5 days ago. This was turning 1, 2, 3, 4, 5, 6, 7 days ago. Okay, so you're getting this relative turn. I thought it was viable on the pullback to the 10-day line. Now, those of you who've been paying attention the last two webinars, you might recall I talked about this new solar stock actually on this day, and you might go back and check the date on that, on this little pocket pivot as it was running. I've been keeping an eye on this because they came public, and they're basically like a Solar City that doesn't lose as much money as Solar City. I think Solar City is going to lose $5.80-something cents in 2015. These guys are only going to lose $2 and I think 60 cents. So on a relative negative valuation basis, this is a cheaper stock. You're getting less losses at a lower price. So I think, unless VSLR can achieve over $5 in losses, maybe it doesn't have a shot at Solar City's $50 price, which is where it's trading right now, 50.21. 5018 make that. So this is another one of these residential solar plays, and it looks, it's worked so far. For those of you who've been following me on Twitter, I tweeted right here that it was pinging off the 10-day, and loaded the boat right there. And you can kind of load the boat on this one. It trades, about 25 million a day right now, dollar volume, a little more than that, close to 30. But it's jacking higher, and I wouldn't be surprised if you see this thing go up to the highs. So I like that stock. Also, the last couple webinars I talked about Juno, and it's been hanging along here. You had this sort of a low cup with handle. You had a breakout here. You had a pocket pivot, I think, right here. Little pullback. Yesterday after earnings, they took it down a little bit. I guess they had a bigger loss than normal. But when it's a biotech, who cares? These things are all losing money. You just buy them and they go higher. This thing's up $5 almost today. So you had to be a little opportunistic buying it this morning on the pullback off the 20-day. But now you're looking at a cup with handle breakout. So, and probably a pocket pivot, right, Dr. K?
Looks that way.
Yeah. So, that one's working. And of course you have Biogen, which never wants to go down apparently, and you had a pocket pivot. It's gapping higher today, kind of extended, wouldn't be playing there. Celgene moving higher and trying to break out. This one, there's another one I've been watching, Kythera, pulling back in a flag formation. You see this big ugly cup, and this makes sense. So I'm kind of watching this one off the 20-day. Only issue for me on a lot of these names is that they're not marginable. And I like to load the boat. That's one of the reasons cyber has never really been a huge position for me. And even though I played this move here, I was never really able to get a big position. Same thing with Intrexon, which was also a great trade coming off there. But let's go to cyber because I think we got to watch this one. They come out, the IPO lockup expiration is on the 23rd, which is Monday. And so I should point out another one I like is Twitter. Facebook seems to be breaking out, so I'm figuring Twitter is going to cruise higher with it. I'm long that one, actually. That's one of I think my biggest position now. Buying it on the pullback this morning. But anyways, cyber is coming into the 50-day. It is actually a buy off of the 10-week line on Monday. And I bought some shares there and then traded out of them yesterday. So you went from about 48 to 53, 54 in a couple of days, 2-3 days, and that's a nice trade. You take it, resistance at the 20 line. Now you're backing in and testing the, well, you're pulling back on, and we'll see whether it's a Wyckoffyan sort of retest. Right now volume is 53% below average. We can check that using the warehouse view. I've got my buy list up here, and if we look at the volume levels right now, let's, whoops. You can see cyber. Where's cyber? Is it even on my buy list? Let's see, what's the volume level looking like? Oh, I think I know what might be the problem. Let's see. No. This is showing 12% increase on volume. Let me check this again. Let's update this. On another source, I'm showing we're actually running 53% below average right now, but it may not be updating properly. Give me a second. You see the market's coming back up. The Nasdaq's now up 11. VSLR, Vivint Solar up $1. That's 8%. That's a happy stock. Okay, we've updated here. Now let's take a look here. Cyber is running, well, 18.2% now above average. So let's take a look at this. Not getting any support. Let's check it on the 620. No real turn yet. So I keep an eye on this. As you're retesting, you're running a little bit above average volume right now, and you're retesting. Let's see, I checked that. Yeah, you're up about 6% above average right now. So it was up 18. Now it's starting to dry up a little bit. Watch this as it dries up on the retest, because you got this big breakout, and you had this flag breakout here which worked, and then it's set up in a real base, and it broke out. Now you're pulling back. When you look at it on the weekly chart, that really doesn't look like anything out of the ordinary. So I think in this case you can look at taking a position possibly on a retest of the 50-day. Doesn't mean it's going to turn around and launch to new highs, but it may round out a new base. I think that this area is still strong. Palo Alto Network's acting pretty well. No real buy points here, but it's acting okay. Um, Vasco data is rallying back. So here you have there's this pattern that I've seen a lot of, and you see it in like Amberella, for example. You can see here on this chart. Let's make this a little bigger. It breaks down. It violates the 50-day. Although you could say technically it didn't violate, but it blows through the 50-day. And if you're long this stock on this day on huge volume, it's not likely you're going to sit there, especially when it's doing this the next day, intraday, and moving lower. You're probably going to be inclined to unload it. And what happens? The thing turns right around, cruises back above the 50-day and the 20-day moving average, sets up for a couple, 3 days, and then launches higher and breaks out, gaps up, and this thing still looks okay, like it wants to go higher. So what I call this is the 50-day moving average violation boomerang, or you call it the ugly duckling duck dive, where the duck dives briefly into the water and pulls out a fish or a wad of algae, and then turns right back up and takes off and heads up into the clouds from there. Another one that looks like that, you can look at Cavium. Here's the same situation here. You have a close below the 50-day here. You violate the 50-day the next day, undercut this low, however, and then turn around, get above the 50 and the 20-day. For me, it's more important to get above the 20-day if it's higher than the 50-day, and more important to get above the 50-day if it's higher than the 20-day, okay? But the two moving average are a rough guide when I see this formation. It pauses for 1 day, and then boom, it takes off for new highs. If you look at Southwest Air, let's go back here. Here's where it violates the 50-day here, gets back above the 50-day here and the 20-day, pauses for 1 day, and then boom, it gaps out to new highs. So you see this pattern, and when I start to see it in other stocks, and here's an example where you violate the 50-day here, and the next day you turn back to the upside, you get above the 20-day here, and now it's paused for 1 day and it's starting to inch its way higher. I would not be surprised to see this thing go higher. So this is a pattern, and I think you need to watch for it. And the traditional rule has been that you sell a stock on a 50-day moving average violation. Guess what? In a lot of cases, that turns out to be the low. So, and then here you are selling a stock out right at the lows, just as it's going to turn around and go higher. So again, this speaks to the whole methodology that I've been using, and it's what helped me be up triple digits last year, which is you sell into the strength, and you look to buy on the basis of bottom fishing pocket pivots, roundabout pocket pivots, and other techniques I devised, the voodoo pullbacks, or this new formation that I call the ugly duckling duck dive, and they work. What can you say? They work. So, anyways, Facebook's launching to new highs. Don't ask me what this thing's doing. I mean, it's breaking out. You had a pocket pivot yesterday on a V-shaped sort of formation. It looked to me like it was going to blow, but of course this is a market stock. It's a big stock, market stock. Market goes higher, it goes higher. So it fakes you out and it breaks out, going higher. If that's the case, then I think Twitter is going higher. And I've been shorting this thing along the 10-day, made some money. It undercut here, so that was a cover point. Rallied into the 10-day, put out the short again. It doesn't go anywhere. What I noticed by being short the stock along here the last, I'm going to say earlier in the week, it wasn't really selling off. And you can see that there's no selling volume in here, and the relative volume on the upside over the last 2 days was picking up. So I think what you're doing here now is setting up, if you look at the overall pattern, you have overhead from the left side here and from here. So it's a gap up move, but it maybe wasn't so viable because it's a little bit sluggish. But from there, it takes some time to consolidate. Now, my thinking was if the market gets weaker and it breaks down, this will probably come down and test the 50-day. So at the very least, it's a tactical short. Fill the gap, hit the 50-day. Didn't happen, okay, which I'm fine with. I made a little money on the short side, but nothing really to write home about. But now you're setting up along the 10-day. And I know these guys are expected to make, 38 cents this year and 80-something next year and then $1-something the year after. So they are turning to profitability, and you're going to start seeing these big numbers, up 80%, up 150%, up 300% on the earnings over the next several quarters. And there was some news about them picking up advertising, or advertising sales are growing sharply based on some nebulous source, but I'll believe it when I see it. But the bottom line here is you have to objectively look at this, and if you were trying to short it, you should also be able to feel that there's no real selling in the stock. You know, like a lot of people want to short something just because I said so at one point, and they think every rally is a short. But the other thing is they're not paying attention to what the stock may be showing them or telling them while they're shorted or while they're trying to short it. You know, the information you get by taking a short position can be just as valuable on the long side of the stock as it can on the short side if you're paying attention. But if you're sitting there, oh, this is a short, this is a short, this is a short, and Gil said it's a short, and I'm going to short it, and you're not paying attention to what the stock is telling you when you can watch it trade and see what it's doing, then you are a moron. So, as always, I'm not one to mince words. Anyways, getting back to this VDSI. So here I have a stock. It's had a big move. This is a security name here. Now it's trying to get back above the 50-day. You had a pocket pivot here. That's a deep doo-doo bottom fishing pocket pivot, but it's turning. And you could have actually bought the pullback yesterday to the 10-day line. Now it's trying to go higher. A little funky action on the earnings news back here, trying to turn. And, yeah, this might go higher. But my thinking here, it sort of dovetails with the fact that PANW is acting okay. CYBR is acting okay. And I think it's in a normal base building process now. The IPO lockup expiration occurs next week, starting Monday, and you know, a lot of people will sit there and tell you, oh, you got to get shorted stock because the IPO lockup's coming, expiration is coming, and everybody's going to sell a stock, and that a lot of times doesn't turn out to be true. The big, the story I like to tell is the one of Krispy Kreme donuts. I knew a lot of hedge fund guys that were clients of ours when I was at O'Neill, running the institutional advisory group, and these guys were all telling me, oh, we're short Krispy Kreme donuts because of the IPO lockup, blah blah blah. And the stock turned around and launched about 40, 50 bucks. I think it went from like 60 to, oh, I forget. Let's go back. Go back in the Wayback Machine here. Take some time for it to catch up. Maybe I went too far. $2001. Yeah, it was right here, as I recall. This is where the expiration lockup occurred. And this is, I think it's 2-for-1 split figures in here somewhere, or 3-for-1. And the stock just broke out and launched higher. So, you know, that's what trying to outsmart the market with a with the idea of shorting something just because they're going to have a IPO lockup expiration is kind of stupid. But so, the bottom line is with cyber, you had your first pullback to the 10-week moving average since this breakout, and I still think that is valid, just based on the fact that buying weakness in this market is generally the way to go. And so I think that's what you do here. You know, you want to sell into this and then look to buy into the pullback. So, somebody says blah blah blah. Sounds like someone is watching cartoons in the background. Are you watching cartoons, RTK? I'm not watching anything.
No, I got some.
The market is a cartoon as far as I'm concerned. What's that, Dr. K?
Just some Bach playing in the background.
Yeah, that's what I thought. So, but you know, in the old Looney Tunes cartoons, they used to play a lot of
classical stuff, yeah.
But there was one particular. Was it Mozart?
These a lot of the pieces that are commonly known.
Yeah, and in the old Looney Tunes, I think they played a lot of Mozart stuff. Anyways, should one adapt and use the 65-day moving average if the 50-day moving average is consistently violated? I don't know. I don't need to really pay attention to it myself because I sell into strength and then try to buy on weakness. My whole point with the ugly duckling duck dive, which I just call it the ugly duckling dive, I don't know. The UDD, how's that? Is that I want to just see it violate and then turn back up. So I'm not in a stock like a moron. You know, I'll generally, if I buy this, which I actually did buy this on the pocket pivots in here, but I sell into the move up here, and then they came out with earnings and they tanked. Now I'm looking at possibly buying it back. I did have a little bit of it, and I sold the rest of it. I think it's going to come in and test the 20-day. You got a little overhead here, but I think this could go higher, but the whole idea here is the setup itself, not whether you're going to use the 50-day or the 60-day, 65-day. I personally would just throw all that stuff out the window and revert to a way of operating that basically dictates you sell into strength and then look to buy into weakness. So then you don't get into that position in the first place. Anyways, Tesla, how are you handling? How am I handling? I don't know. I don't have a position, and I can't borrow it. And I'm not really inclined to short anything just yet, but it is rallying into the 50-day. I still think this thing is done. It's just a matter of maybe the next earnings report, or maybe this is where you short it. So I'm not handling it all. I'm not really paying attention to it because I can't get a borrow on it. Maybe what I should do is get approval for options and buy some puts. I mean, you could buy some puts. It's right at a logical area of resistance. Could go a little bit higher, but you know, it's just rolling around in the pattern. And of course, there's some news event today, isn't there, about the range problem, which I think they have more of a sales problem, given that China was supposed to be this area of huge growth, and they basically abandoned China. But now, I guess that's Elon Musk is, you know, it's kind of sad because I think the guy's brilliant in terms of his ability to come up with concepts and ideas that are futuristic and address a lot of today's problems. And but I think his tendency to get too hypey about his stuff is really a weakness, and it relies too much on BSing people. And I think you know, there's something Bill O'Neill used to tell me, and he was very adamant about this. And his rule number one, I think, in our 10 rules in the first book that we wrote, is that never let the truth become your enemy. And I think Elon is violating that principle. So I'll have to tweet him or something and let him know about that. But it's true, never let the truth become your enemy, you know? So if the truth is your enemy, do something about it. Anyways, let's see, what else? Dr. K, people want you to go into the chat room, and mainly because I've been saying that I'm not going to go in there by myself all the time, because I don't think it should be all Gil all the time. I think that's unbalanced. And if virtue of selfish investing is supposed to be the two of us, then it should be a balanced presentation. That's my feeling. And so people,
as I said, I don't mind coming into the chat room once in a while. That's no problem at all.
okay.
So, you know, when you want to do a dual thing, let me know.
Okay, so let me know when you want to do it. So I'm too busy trading and making money. I don't know.
I don't know. I mean,
We'll work it out.
The chat room is that it doesn't seem to have added a whole lot of. I mean, just maybe for a few people, but overall, holistically, it doesn't really seem to add a whole lot. And there's a lot of noise in that room that seems to do more disservice than anything.
I think that's also the weakness as well. And my point to people is that, you know, do I need to be babbling about the market 24/7 or every minute of every trading day? I think a lot of times it's better off if you don't say too much. You say just enough, because you're trying to do a play-by-play like you're a football game announcer. I don't know if it works so well in the stock market. I know there's a lot of websites out there that you can watch, and they'll give you all you want in terms of real-time news and so-called play-by-play analysis, but does it really help? And so that's really the question for me. So my view is I'll come in once in a while. I was in there a couple days ago on Tuesday, and I think that was a useful visit on my part, because I discussed some ideas that I thought the Fed is pretty much stuck, and they're not going to be able to raise interest rates. And even if they do take out the word, what was the word they took out?
Patience.
Patience. They're still going to jawbone. And you know, this whole thing about them now becoming data dependent, that's a bunch of BS too, because they were data dependent back when they said that once unemployment gets below 6.5%, they're going to start raising rates. And now it's at 5.5%, which is supposedly full employment, while Yellen is still telling us that they're still working towards their goal of maximum employment. But they've hit full employment. So they're telling you that the data is all BS. It's all BS, and all they're doing, like Dr. K said earlier, is rationalizing the need to continue keeping rates at a low level. So now we have basically 5 years of interest rates near zero in the midst of this allegedly strong economic growth, which is all BS. So eventually the chickens will come home to roost, but you know, that could be a while from now, and why do I need to worry about it when I can be long stocks like
The other thing also is, you know, if something's really pertinent, and it will end up in the dailies, the pre-market pulse reports, or we'll do a special report that we send out to everyone, so it's not just people in the chat room who get wind of it. If it is important enough. So it comes back to that whole thing of how useful is it more useful to spend time an hour in the chat room, or is it more useful to spend that hour writing something that is going to be beneficial to everybody?
Yeah, I mean, these are things to consider, and I think they're all valid questions. So, but Dr. K has stated publicly now that he's willing to come in once in a while, so maybe we'll do it once in a while. But that's what I'm going to do.
Let me know when it moves you, or if it moves me to have something. But I don't know what that's going to be, because if I'm moved by something, I'm going to write a report, or I'm going to put it in the pre-market pulse.
Right. So So that's something else people should watch, and I've indicated before that is actually generated originally by Dr. K, and I come in and edit or add anything I want to. So a lot of times though it's just good enough to run as it is. But anyways, is 10 Cent Holdings? Oh, I'm sorry. What is 10 Cent Holdings? TNCHY? No, what is 10 Cent Holdings symbol there?
I thought it was I guess, did they change the symbol?
Okay, somebody mentioned this stock, this Chegg, and I think this thing actually has some potential. And I've looked at this pretty closely. The ebooks for education. My kids go to private schools, and my daughter goes to high school where they have to buy their own books, believe it or not, and she spends like $300 a semester on books. And of course, there are these huge things that everybody has to lug around. She gets backaches from her backpack being so heavy, and blah blah blah. And I've often wondered why don't they have ebooks, especially with the kids these days are so attuned to the technology. It seems to make sense to me. And so that's what these guys are doing. And if you look at this, they did come public here and tanked immediately, a lot like this Vivint Solar did. And then now it's setting up. Now you notice you get this sort of pattern where it's tightening up, which is what it did. It's still kind of sloppy on the daily, but you got the Bible gap up type of move on the earnings at the end of February. And so now you're tightening up. The only issue I have with it right now is that it's still a baby. What's it trading a day right now? What, 400,000, 500,000? Let me check this. I can't get.
Well, because of the recent volume spike, it's up about 700,000.
Here, let me fix this. Whoops. I'll get this right eventually. Yeah, here we go. It trades 764,000 shares a day. So, it's not even 10 million a day in dollar volume. So it's still a baby. But let's see if anybody big owns it. So let's go. You can go on to Yahoo Finance and just check stuff here. Sponsorship report on them. You've got some decent funds. There's a number of A-rated funds. Prime Cap Odyssey Growth owns 2.5 million shares. They're rated A+. Vanguard A- owns 624,000. Fidelity Spartan Total Market Index Fund owns 50,000. Lord Abbott took a new position in the most recent quarter. They're rated A+, has 121,000. So they are buying this thing. There goes GoGo now. Just turned positive. I love GoGo. And again, it's another one of these examples of a stock that is rounding out and turning back to the upside. So I like the sponsorship in it, which I think is a good sign. And conceptually, I like it as well. So now you guys can all start buying it and run it up to $10 because it trades very little volume, and it's a little bit thin. I actually own a little bit, I have to confess, and it's just hanging out here. But my suggestion is just put a limit on the offer because there will be stock sitting there. It's sitting at the 10-day. If you want to buy it, but it's still a baby. But I like the concept. I like the fact that it's trying to round out it, but it's still a baby. It's kind of like this Zyop when it was around similar price. I didn't really care for it, but right around here, I told you guys I thought this thing was now starting to grow up to the point where you see the volume picking up, and you're trading $40, $50 million a day in dollar volume. So that was a point where you want to come in, and of course that's where it has a big move. It's also cousin with Intrexon, which started to have a move at the same time. So with most of these smaller stocks, like I said, I don't need to pretend I'm a genius who can find a $7 stock that's going to 50 and buy it at 7. I'll probably buy it at 11 or 20 something or 30 something, and hopefully it goes a lot higher. So, and I don't need to buy them when they're this small. And the big problem for me is I can't buy a lot because it's too small. So, you know, I have to buy 50, buy 100,000 shares to have a meaningful position. Look, now you guys are going to start pushing it up. Go, go, go. Wait, let me buy some first, you guys. Hang on, will you? Let's see. Whoops. I don't know. This one's a hard one to buy. Anyways, I bought it yesterday, so you can push it up for me. I don't really have a lot. All right, TCEHY. It's 10-cent holdings. Gapping up. Okay, is that a buyable gap up? Looks like it to me. You should put an alert out on this.
It's all right, actually. Kind of like the Juno pocket pivot we saw earlier. That was definitely a valid one. But of course, we I mentioned Juno a few days ago when it had its first pocket pivot.
Right.
Yeah, I mean this one, you know, it's going up on a good earnings report. You know, it's because it's an ADR, it tends to gap up and down, as you'll notice in the price. But you know, so I wouldn't call this. I would call this more of a pocket pivot, really, because it should. What's it trading right now? It needs to be. Yeah, it's going to have a pocket pivot.
This one.
And it's worth reporting on because it looks pretty good.
Yeah, so everybody jump all over it. It's probably not marginable, but it looks okay. So that brings up, if 10-cent holdings is moving, is Baba buy down here? I don't know. I'm watching this. So, you know, you watch for the ugly duckling setup here, but so far I don't really see anything. Although I do know a hedge fund guy who's been buying it down here. And he's generally pretty smart. But let's see. Some other names. Facebook's going bonkers. I hate this stock. You know, it runs up, pulls back, goes higher, whatever. I'm along Twitter now, which is, and I bought the crap out of the pullback this morning, and now you're gonna pocket pivot. So let's see. What do we need to trade here? We need to trade. I believe it's this number right here. Let me go. This here is 17,289. Yeah, that would be the highest volume. So let's see. So what I'm going to do is put a volume alert on there. I don't know if you guys have volume alerts. So I got 17,289. So just make it 290 even, and set a sound for that. I usually like to use a big yay, Dr. K. I don't like to use a bullet. I think it's kind of negative and violent. Like that. That's the one I like to use. Anyways, the bullet's too violent for my taste. Yeah, right.
Leave that to my sound effects.
Actually, I love the sound of a gun firing, but that's just me. So, anyways, but this zinging bullet, maybe it should just be like a shotgun blast. I would like that one. Anyways, so that's what we're looking for. So you want to see it trading higher than this volume right here. Let's make this bigger on here. Be this volume bar right here, and that is 17,289,800. Make it an even 17,290, and you've got it. Let's see what else is going on here. LinkedIn. Someone on the chat room actually I thought was pretty perceptive. I think that was Scotty, who hopefully I'll be seeing at the HGSI or HGS Investor Conference next weekend. Not this weekend, but next weekend. I think it's the 29th through the 30th or 31st. Something like that, 28th through 31st. I don't know. I forget the dates exactly. It's just the weekend after next, and I'll be there. Hope to see a bunch of you there. I'll be talking about some of the new stuff in the new shorting book, and actually even updating the book, because there's been a number of things in the last quarter of 2014 that were good examples of some of the stuff I talk about in the book, even though I didn't include them in the book because the book was basically put together by the end of the third quarter. Anyways, you can see LinkedIn, the Bible gap, but this is a late pattern. Okay, so it's occurring late. Remember that what I talk about is I like to see Bible gap ups earlier in the stock's life cycle. So this one was pretty good, and it worked. It went higher. That was back in 2013. And this one's coming later in the life cycle of LinkedIn. But you do get the pullback to the 10-week line, and it doesn't make it to the 50-day. And as I've often told you guys, you have to be paying attention to both the 10-week on the weekly and the 50-day on the daily. And some of you, well, that's hard to do. Let me show you something here. You see I have a daily chart up here on my HGS charting module. So if I go here, new HGSI charting window, okay. And come on, I don't like that little circle. Okay, so you take this one here, and you can go over here, and now let's pull up a different view. User views, let's try. No, let's see. What happened to my weekly chart? Alright, well, let's make a new one. How about that? Let's see. Okay, now we're going to edit this. And it's going to be a 10-week here. And we'll add another one. It's going to be a 40-week, and it's going to be color-coded red. Okay, now I think we're good to go. Oops. Oops. Well, I did one thing wrong. Let's go back here. Close up would be blue. Close down would be red. And close unchanged, we'll make it black. Here we go. Got to do one thing there. Okay, whoop, one other thing I got to do here. Let's go back to price. I want fatter bars here, so always easier to see, especially if you're blind. Okay, there we go. Alright, now what we're going to do is go down over here to Tools, and I'm going to link multiple chart windows. It's already clicked. Okay, so now you can do this, and the two will move together. So what that allows me to do is if I'm going through my daily watch lists, okay, and I want to line things up by, let's start with the things that are showing volume dry up. So we can go here and then just flip through the list, and you can see how I can quickly see both the daily and the weekly charts, and they're moving at the same time. This one's interesting, this dense ply. These are things on my buy list, by the way. O'Reilly is still happening. Cavium, I like this. This maybe is going to have a pocket pivot. I talked about this yesterday. Shake Shack pulling in, looks okay. Intrexon pulling along, holding along the 20-day. This may become viable. Somebody the other day, I think it was this day, they were and I saw what I see what they're seeing. If you look at the volume on this day, that was 5 days ago on the chart. There's really low volume, so it is volume dry up. The only issue here is that you're not pulling into a moving average. You're under the 10-day. So I think in this case, what you got to do is wait for it to come down to the 20-day, which would have been smart. And as you can see, the stock is kind of holding along the 20-day, and it might pull down a little more. But you want to, I like to see the volume drop as it pulls into a moving average, or even on top of a prior base. It would have to come down a little more. But so you got the concept half right, okay, on that. Somebody tweeted that to me. Zetas acting okay. It's slow as hell, but you had the Bible gap up here going nowhere. Eventually, maybe somebody buys them out and it goes higher. Here's Zeltique, starting to turn cold blue, but you can see you came down, you tested the 10-week, you dipped below it, but you're on top of this structure after earnings, so it did really hold up, and it has had a decent move from here to here over the last, say, 7 months. Now you're consolidating here, and this is sort of an ascending sort of pattern here. I think you had only two pullbacks before you went higher. And the ascending base I wouldn't pay too much attention to. Watch for pocket pivots and whatnot rather than trying to label a base as this or that. I think a lot of that's flawed. Anyways, that looks pretty good. Let's continue through my buy list. Cambrix, that one we put a pocket pivot alert on here. You can see it's highlighted blue. This is also my secret weapon bar chart with the group index that they have already on there. So if you guys want to use that, you can. Here's GoGo. Now I like GoGo because it's flashing wildly code blue on my indicator bars, and you get a nice little pullback to the top of the structure this morning. I think it's a buy. So I actually stalled into this move, and then I just bought it all back this morning under 21. So SunPower I like. I think the solars are going higher. And so SunPower looks good. It's going code blue today on an intraday basis. We'll see if that holds by the close, but you notice it's coming above the 10-day. And with all this light volume down here, you can see that it's drying up, so it looks okay. Disney's still going higher. You can see here's VC Antec Wolf on a little volume dry up holding along the 10-day. This stock, I think it had a pocket pivot. We put this on as a pocket pivot right here, right, Dr. K, a long time ago? That was like a couple months ago.
I believe so.
Yeah, let me, well, I'm trying to show, you can see both charts on here, so that's, and you can also see where it is, positioned on the weekly. So this is, to me, very, very useful. And I don't think you get it on other systems. But this is something that I asked these guys to do, and they did it. And they've been doing a number of things. Somebody asked me, have you had them put a Voodoo screen, volume dry-up screen on HCSI? And no, because I think, number one, you should be able to create one yourself, so don't be so darn lazy. And number two, I don't really use a screen for volume dry-ups. I eyeball them. And as I've shown you guys before, when I look at my buy list, so this is my buy list, gives me by Gil's Stock Market Ideas, the GSMI, that's what it stands for. I look at my buy list and I look at what's coming in on light volume, and that's what we're going through right now, okay? So the Intrexon right now is minus 43.6% as it's pulling in. So, and you can set this so that it continuously updates in real time for you. So every time you look at it, it's showing the most recent updated data. JD.com, you can see here, holding along the 10-day, you get up 1, 2, 3, 4. This is actually a 5-day pocket pivot. I had them highlight that because I'll use that in some cases. And I did use it in the case of VSLR, which we'll get to. Here's JetBlue. Making higher highs. So I've talked about this before on the webinars. It's kind of a slow stock, but it's happening, I think. Here's this Kithera Biopharmaceuticals, and pulling in. If we look at the volume on this, there we go. It's right here, minus 22.5%. So drying up a little bit, but not what I'd like to see. Lanet just continues higher. That thing's a monster now. Look at that. You had a pullback to the 20-day and to the top of the prior base, so that was a buy point if you wanted to stick your neck out there. Let's see. Market coming off. You notice the Dow and S&P are down, where the NASDAQ is up. I think there might be some rotation out of defensive names, and so you might want to just understand that you could see a pullback here in the Dow, and it might be more related to defensive names. I haven't looked at what's going on in the Dow itself. Here's MasterCard trying to round out after pulling back to the top of this range. I'd call this, if you draw a line across here, trend line breakout, so pull back to the top of that in the 50-day. Had a nice move yesterday off the lows and hanging out. That might go higher. Medivation continues higher. Michael's company's a little flip out today, and now it's back up nearly unched. NXP continuing higher. They're buying out, who did they buy out? FSL, right? Is that right, Dr. K? Freescale? They bought out Freescale, so.
Yeah.
Anyways, let's see. Palo Alto Networks, Code Blue. I mean, this thing looks like it wants to go higher. That's why I think cyber will eventually stabilize in here. They did the secondary offering at $51 last week, and it's actually holding up today. Only down 29 cents. So let's see. Corvo, this thing's a monster too, but you got to buy it on weakness. See, here's the weak volume or light volume Voodoo type pullback into the 10-day here, and then it launched the market on Monday and continuing higher now, breaking out. Qualys is a thin cybersecurity stock. This is another one acting okay. But again, the group looks okay. Here's Relipsa hanging along the 10-day line. Salesforce, Bible gap up, fails all the way down to the 20-day line, fills the gap, and then turns and goes higher. So, and you know, that's kind of typical for what this market likes to do. It likes to screw you up, and it'll do this stuff. You know, strong moves suddenly flake out. And here's one big strong move on Second Sight. These guys have a product for, what is it for, Dr. K? Retinal, I don't know. People who are blind can see, basically.
Yeah, they do the plants.
Yeah, so, you know, it's set up, and here's this pattern. You see that happening in VSLR right now, maybe this chug, whatever you want to call it. Chug-a-lug, that's what I'll call it, CHGG. But it's you have the IPO, and then it just tanks immediately. But then it takes some time, sets up, and now it's run up. So you could have bought this move here and made some nice money on this. Now it's come all the way back. So Shake Shack, they're losing money. I don't know how you lose money selling burgers and shakes, but these guys managed to do it. But they still seem to be setting up here and trying to go higher. Sierra Wireless, I'm just watching this one. It's building a base, but not really doing anything. Skyworks, another monster that never wants to come down. I'm not sure why I'm getting a, okay. That's a monster. Somebody asked me, Gil, what percentage of margin do you usually trade? If I like something as much as I can use. I mean, I don't sit there and calculate how much margin I'm using. Somebody the other day sent me an email. They're asking some question about how do I decide if I see a new position I want to take, how do I decide what to sell? And I said, I don't know, I sell the crappiest thing and I unload it. And then they asked me, what percentage position will you take? I said, I don't know. I don't invest with a calculator. Maybe some people do. I don't use spreadsheets and calculators to invest. I fly by the seat of my pants and just see what things are doing. I let the market tell me what's happening. And I've noticed that, when I was trying to run hedge funds, I was using a lot of quant BS and spreadsheets to keep track of my positions and ranking the positions by all of their parameters, and none of that worked. And I just went back to what I've always done, which is if I see a fat pitch, I get the biggest bet I have and I take a swing and see what happens. So I don't know. I use as much margin if I can. The more I like a stock, the more I buy of it. So I don't sit there and calculate how much. If you want to do that, that's great, but don't ask me how I do it because I don't. These are acting well. Starbucks, here's a pocket bib going higher. I've been thinking this thing's a $100 stock, and of course it's getting closer. SunPower, we looked at that. Taser, I just keep this on here because I keep thinking maybe. See, again, ugly duckling, breakdown, but it's not going lower. It's trying to set up. And this is actually Japanese rice traders used to use a frying pan with handle, is what they called it, rather than a cup with handle. But that was a bottoming pattern that they've used. And I'm wondering if that's what you're seeing in Taser. And it definitely has the ugly duckling aspect going for it or against it or something. I don't know. Twitter, here's Twitter moving. You can see looking good this morning. Up a little bit. Facebook's really charging. Ulta, after the Bible gap up, really going nowhere. But this could set up. It's holding very tight. Volume's drawing up. It could, I think, could go higher. And you're seeing a number of other names. I think Skechers looks pretty good. VIP shops, VA. This thing's, I don't know what's going on with this, but I thought it might turn in here, but it didn't. So that was out the window. I should probably take it off. Here's Visa. I'm not sure what's going on here. Whoops. Let's make it smaller. Not sure why it's scaled so weirdly, but looks like a big pocket pivot yesterday. Did they split the stock today?
Yeah, 4 for 1.
Oh, so that's what's thrown off. You see the chart down here. All right, so that's nice. Here's Vivint Solar, which we're talking about. It goes code blue in here, so that I'll pay attention to when these things turn. But again, this is the same concept. The IPO eats it, and then sets up, gets real tiny here. Then you get this little subtle pocket pivot. And if you guys remember, I think it was 2 or 3 weeks ago, I've actually pointed this out in real time. And it went higher. So, of course, I didn't buy it at that point. I really loaded into it here 3 days ago, and it's rewarded me with a nice 20-something% move, I think. And that's looking okay. Like the dual view, still running the software, but that link capability is cool. Somebody says, I remember that VSLR discussion. Someone else says, yes, thank you for the VSLR dollar signs. What service do you refer to when examining fund ownership? You can look at, I think MarketSmith has something, but you can go to Yahoo Finance and they'll show it. You can use Bloomberg. I got rid of my Bloomberg, actually found that I didn't really need it. And I think there are a variety of other services that you can try. But you usually have to pay up for it. But the other thing you do, I think MarketSmith will just show you the number of funds that own it, and you can see a substantial number. That's usually pretty good. But I think if you go on Yahoo Finance, you can find ownership, institutional ownership in a stock. You just want to get a sense that there are some big funds that are smart funds, and I guess you can also go into IBD and check out the ratings of those funds and take it from there. So Morningstar has that capability. There's a free service for the top owner. So you go to Morningstar.com, probably. Thanks for that, Gar. Okay, we got a couple 3 minutes left here. What else looking at? Let's look at Grubadub Dubs pulling in. I like it's coming into the 10 days, so just keep an eye on it. Let's see, Amberella. Isn't this all? Yeah, it's on my buy list. Hanging in there pretty tight. You notice how they have the gap up and it comes in, but you got to buy it along the lows, and that's the place to be buying it, and it runs and goes higher. Let's see, what other stuff? Vago looks pretty good. That's hanging in. Whoops, that's hanging in tight. That's like another one like SWKS. Looking okay. Let's take a look real quickly before we take off here. We go to all securities. So I'm going to put a filter on this. So this is going to give me price up with ERG 180. Using an ERG rating of 180 is comparable to a composite rating of like 80, 85, something like that. But let's look at what's jamming here today on volume. So, you guys ready? Here we go. This is what I think is really fun, and I like this better than Wanda now. I like this better than MarketSmith. And I like the fact that George Roberts and Ian Woodward and Ron Brown over there have been big supporters of my and Dr. K's work. And they realize that the stuff works and that we know what we're talking about, and so we're people that they want to have on their system. And I do, the results speak for themselves. If I did triple digits last year, so I've figured out this market. It's taken a while, and my motto is adapt or die. And I've adapted, and the last 2 years up 52%, up 115%. Actually, you know what? I need to revise that. My accountant's giving me 109%, so he did a little review on it, but leave it to an accountant to roach your buzz like that. But in any case, yeah, just cruising through here real quickly. You see a lot of financials, state banks, state investors, state national. These are things moving today on volume and on the biggest volume, State Street. So you see the financials, and why are they moving? Anybody know? Because interest rates are going to stay low. So, bada bing, bada boom. What I noticed, though, interestingly, is that, whoops. I've been trading currencies recently, and one of the reasons I do that is, number one, to hedge against currency risk, because currencies are doing all kinds of things, and take advantage of some of the moves, as well as to maintain an awareness of where currencies are trading. And I noticed that the dollar is trading back up, and despite the fact that interest rates are staying lower. Now, Dr. K, I have a quick question for you. If the dollar is rallying after the Fed has said they're not going to be lowering rates, do you think that's indicative of the dollar being the tallest midget, and the fact that maybe there's an issue with the euro and currencies around the world?
Well, yeah, I think that goes without saying that the euro's in trouble, and the U.S. dollar is the tallest dang midget, so the money flocks to the midget, the tallest one, and that's the U.S. dollar. So, it's had this quite a run over the last several months, which is not so surprising. Same with the U.S. markets. I think they've been pretty much in the lead over the last several months as well.
Yeah.
You look at some of these other markets, and they are, they're behaving like bear markets. They can't get off. They can't get off the ground really. The European bourses have been stuck in downtrends for a good 9 months. You look at all these various world markets are just not doing quite as well as the U.S. market. The Chinese market, interestingly, that's been kind of a very weak, loose uptrend for several months. But again, if you compare that to the U.S. markets, I think the U.S. markets have them beat still. So, U.S. dollar, the strength is probably going to persist given the tone of everything, and it still is in a in the 8th month, 7th month of this fairly strong uptrend.
Yeah, and you look at what happened yesterday. You had a big break, and then you just the UUP gap's higher. But I actually went long the dollar yesterday evening, and it's turned higher. And you can see, basically, actually, we went short the euro versus the dollar and long the dollar versus the Japanese yen. And you're seeing these positions actually becoming profitable pretty quickly, and actually pretty profitable. So, anyways, but I think this is interesting. So maybe something to keep an eye on. Anyways, that STO shouldn't have been on there. For some reason, my filter wasn't on there. So I'm not sure what's up with that, but now I got it straightened out. But in any case, we don't have time to go through this, but I think you guys should get this. They're offering $399 for 12 months, which I think is a steal as an introductory offer right now. And I pay for mine. $300, $400 is like peanuts, so I don't need to worry about it or ask them for a discount or something, because I like the fact that they're responsive to what I've asked for. And as I told you guys the last time or a couple of weeks ago, my objective is to help people who don't necessarily have the resources to afford all this fancy stuff. And so if I can help somebody like HCS Investor Software create a cheap product that's accessible to everybody, and they're able to put a lot of these features on, because my observation at O'Neill is that a lot of the great features they have don't really cost a lot to. You can see XON starting to take off now up $1.78, so that's turned. But it's not like a big cost to the firm, but they would try and gouge you and charge you more for every little thing. And my view is the American entrepreneurial ethic, if you want to call it that, is to offer greater value at a lower price. And so an organization that's geared towards doing that is somebody I want to work with, and they're doing that. $4.99 regular price, $3.99 on the new introductory price, and adding features that I'm helping them to develop and get up here. I think it's a boon for your average investor who doesn't have a lot of money. Most people I know start out at $5 or $10 grand. I started with $3 grand in 1990, and you don't have a lot of money, and you can't afford $1,000. Even $1,000 a year is a lot of money. So my objective, my mission, is to help people make money in the markets, help people learn to think for themselves, and to help create tools and services that are priced reasonably, such that your average Joe or Josephine can afford them. And that's basically what we're doing. Anyways, somebody says, trading currencies with the O'Neill disciples. I'm going to tell you a little secret, is that if you use a 620 chart with currencies, and I actually will use a 620 chart with on a 5-minute chart, and I set up the same one. I also throw a 50-day exponential moving average on a 4-hour chart and a daily chart. So I'm looking at a 5-minute, a 4-hour, and a daily chart. Daily chart gives you the general trend, and then you kind of break the trend down on the hourly chart, and then from there, the 5-minute chart, you can actually use the 620 to trade currencies, and it works using the signals. So I'm not really going to get into it right now, It's something that's relatively new for me, but I decided I wanted to learn more about currencies, and I also had noticed that some of the movements in currencies look like they could be traded using 620, and I found that to be the case. So, take it from there. So for those of you who trade currencies, you might look into that. It's very simple, and it works. That's all I know. So anyways, and that is all I know for now. So you guys, no more questions. I see Cyber now turning green. And Trexon up $2 suddenly. What the heck's happening there? Let's take a look at this real quick. So you can see on the white coffee and retest here, this is kind of coming up. And Trexon suddenly decided to pop off the 20-day. Yesterday it found support at the 20, now it's starting to move. So Facebook's still going higher, Twitter's still going higher. I noticed First Solar's floundering about. I like the stock though, but the pullback into the 10-day may just be viable. And it sets up a pocket pivot. You notice there's no real volume in here, so nobody's really selling it, but you're seeing on a relative basis the upside volume is picking up. And it's code blue. So anyway, I like these. CUDA setting up, someone says. Yeah, I mean, you see a lot of things setting up. That's why I didn't think yesterday you need to pile into everything. In fact, I sold some things into strength yesterday and decided I would wait and see what happens tomorrow. You get a down opening, things pull back a little bit, I can load up again, everything turns back to the upside. It's a beautiful thing. We'll see how we close. Anyways, that's all I've got. You got anything left, Dr. K?
No, I think we're good. At Juno, I sent the report out earlier in the broadcast. It looks like it's up about 5% since, or no, 8%.
Yeah, it's up 770 now. It's jamming. So I like that stock. Anyways, that's all we've got. I hope to see a lot of you guys, or a good number of you guys, next week at the, remember, week after next at the HES Investor Conference. You can contact them about the details, but I think, you should look at getting this. I think it's very helpful and useful, and the new features make it very, very powerful in my view. And it's really mostly what I use these days. So anyways, I'm getting ready to dump my Wanda, Dr. K. So anyways, I think everybody should get it. That's all I have to say and about that, and we'll catch you guys next week. Take care. Have a great weekend, too.
Later.